eyes in the investment world right now are not on Wall Street. They are on Santa Clara, California, home of Nvidia, who is reporting earnings tomorrow after the bell, and everyone wants to know, what are they going to say? Our guest today is going to be able to answer that and then some. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona, who is
I got
also
a
the
vest on.
host. You're also the host of the Money Mavericks show that's coming out. Everybody is on the edge of their seat, Toby, for this one.
I get that all the time, Todd. Thank you so much.
Absolutely. Well, I know someone who is actually probably going to be a featured guest on Money Mavericks, and that's our guest today. Danielle Shay is coming back to Buy, Hold, Sell. Danielle, welcome back to the program.
Thanks so much for having me. I'm looking forward to doing the show with you guys again.
Absolutely. Well, we're thrilled and we're honored as well because we know how busy you are right now because you are a trader. You're an expert trader. You're VP of options over at Simpler Trading, but you're probably trading this Nvidia stock, which was down over 4% today going into the earnings day. What do you make of it? How do you play this stock right now?
So when you look at Nvidia, I think it makes sense that it's trading lower. You know, you have a lot of people that have made a lot of money in this stock going into the earnings report and they want to take profits. You've been seeing some stocks like Palo Alto right now is down big after the earnings report. And so I think it makes sense. You know, if you made a lot of money in Nvidia, you got to make sure that you take some profits, especially if those are like shorter term profits before the report. But I think with this one, you know, we got to be careful because I think the hype is huge. And if you look at last quarter, it had a pretty muted move after the report. It gapped down 0.2%. It was pretty flat, and then it traded lower after. That was coming after 3 quarters in a row where you had big gaps higher. The quarter before that, 6%. Quarter before that, 26%. Quarter before that, 12%. So I feel like it might be slowing down a bit. And I feel like even though I love the stock long term, the hype may be a little bit too much and we may see a pullback on this one.
Hey, Danielle, let me ask you a sort of inside baseball question because you're an expert in options. One of the things I've been trying to share with our subscribers is that in a case like Nvidia, where literally it goes straight up, you know, $100, SMCI was even, you know, crazier. That my option friends were saying that you got to understand, if I'm creating a call option, let's say for SMCI or Nvidia, and I sell that to you, then the option market maker, I should say, has to hedge themselves or herself, and then but it becomes a self-fulfilling prophecy where they had to buy shares to hedge themselves in case you know, the thing went crazy. But then when it goes crazier, they have to buy more. Can you explain a little bit how the option, you know, market essentially accentuates this craziness that we've seen like in SMCI?
Yeah, you know, we see a lot of craziness like that in the options market. And that's why I like to trade these key psychological values, because with all of that going on in the background, you can use those key psychological values and you can look at high open interest targets, because oftentimes the market will go to those zones. And so
it's sort of a magnet, right? It sort of sucks them up to that point.
Yeah. And so it's a lot of craziness in the background. And the main thing that I like to do is I like to go in and I like to look at the options chain, and I like to identify where you have these high open interest targets, where you have a lot of trading going on at those strikes. And I like to align that with your key psychological values and your expected move. So for example, with Nvidia right now, you're trading right around $700, right? 694. Okay. You have an expected move of about $70. So if you go into the options chain in Nvidia and you say, you know, I want to make an options trade because I know that there's a bunch of hedging going on and I know the market makers are selling options, and you have, you know, all this, you know, what if Nvidia does crater? Like, what would be a price point where I could say, you know, maybe I could place an options trade around that? If we moved, you know, let's say the expected move, let's say like 1.5 times the expected move. Okay. That would bring you right down to around $600 a share. Okay. And if you look at your options chain, you're going to see that you have a ton of volume and a ton of open interest in that $600 strike. And so oftentimes what I'll do because of all of that is I'll place a lotto trade. I can place a butterfly targeting that zone. I can place a debit spread. I generally like to use butterflies because they're the cheapest, but I mean, you can pay less than $500 a contract to place the lotto trade, you know, in case Nvidia falls into the $600 strike.
Yeah, I mean, Todd, I think it's important that people understand that there's sophisticated option traders like Danielle back there that are not just buying a call option, you know, in and of itself. That if when you say the psychological lever, are you talking about the round numbers? Are you talking about the 50-day support, that type of?
Yes, I'm talking about the big round numbers. So, you know, with Nvidia, 600, 650, 700, those would be pretty good magnet price points. You can also use, you know, 25, like 625, 675. But I like to start with just those big round numbers. And then I like to overlap that with where we have the most open interest. So, I mean, if you look at Nvidia, for example, in the 600 strike, there's 14,000 contracts if you're looking at volume. If you look at 625, there's only 2,500 contracts. So that tells me that the 600 strike has a lot more of that market maker action there, which can be more of a magnet.
Well, Todd, I was also going to say that, I mean, if there's not the purest definition of being priced for perfection, NVIDIA is the poster child as much as SMCI was as well. What we try to tell our subscribers, particularly in SMCI, because NVIDIA, you know, it's sort of gone like this. SMCI went it straight up. It went up $100 a day for 3 days in a row. That does not happen. Okay, ladies and gentlemen, that does not happen. That is forced buying. That means people who had sold it short had to buy back because they were getting a telephone call. Dear Mr. Smith, would you deposit another $150,000 in your margin account because you're upside down? Otherwise, I'm going to cashier you out tomorrow. What would you like to do? So, I mean, when you're playing in that game, man, you gotta understand. That's why on SMCI and somewhat on NVIDIA as well, when we went from the $73 entry price we had on SMCI to $450 in, you know, essentially 3 months, you know, we suggested, and certainly in our managed accounts, we actually got our $73 back first. Then we let those run. When we got another $150 to $250 of profit on top of a zero cost basis, shockingly, we took more profit. And if you're lucky enough or fortunate enough to stumble into one of these trades, then for Pete's sake, don't just sit there and, you know, what do I do? You need to take your risk off. That's what an experienced trader does, is we take risk off and forget about the taxes. I mean, you're going to have some losses. Trust me that you'll be able to write off against those gains. But this was just like I was telling Todd, it's just like JDS Uniphase in 1999. You know, went from $85 to $795. I remember I was at a money show giving a speech, and I was going to people like, all right, spirits of JDS Uniphase, be gone. You got to sell some, okay? You're in a trance. And people are locked up, and it just simply take your original capital out, then 2 times your capital out, then 3 times your capital out. And yeah, then you can let it ride because you're already sitting on 3 times your money in SMCI's case in 40 days. That does not happen. That was a function of option people getting margin calls that they had to buy it. They weren't natural buyers, what I'm trying to say. They were forced buyers, and there's a big difference.
Okay. So Danielle, Toby sent me some notes on this, and he was breaking down the numbers, showing what NVIDIA made fourth quarter of 2022, and then what they're expected to do this year, or in their earnings report that comes out tomorrow. You're talking about your strategy in the event that the stock drops. What about it going up? What about a big beat here? Do you have any numbers? I mean, I know you can't put out it's going to rise X amount of percent. But are there thresholds that would have it even going even higher than that if we reach certain points?
Oh, definitely. So something I've been doing a lot surrounding earnings season, especially with these big stocks that can have big moves, is, I mean, I'll trade it both ways. So, I mean, I can place essentially an out of the money butterfly in the options market at the upside target. And then I can also place one at the downside target. And, if you can get them cheap enough, and if you can get your risk to reward, risking 1 to make 5 or risking 1 to make 10, then, you're going to lose money on one of them, obviously, but ideally, not both of them. So for something like Nvidia, if I placed, for example, a butterfly, a put fly at 600, I could also place a bullish fly up at 800. And then, one of them's not going to work. But if you look at the price targets, I mean, you just do the same thing, right? So it's trading right around $700 a share. You have those big round numbers. One of them is going to be 750. That's right where the previous high was. The previous high was at 746. So sometimes I'll look at this and I'll say, maybe I want to place more of a conservative trade that is what I would call at the easy target to the upside. The easy target is just a return to the previous high. You're not looking for anything crazy. You're just looking for a return back up into that zone. So I could place something, moderately bullish, targeting 750. But for something like a blowout, I mean, it's got to be up at 800. And if I go to my options chain and I look at Nvidia and I say, all right, it has a $76 expected move. Let's say it moves a little bit more than expected. What does my volume look like in that 800 strike? Just for comparison's sake, at the 790 strike, we only have 2,400 contracts, okay? But if you go up to the 800 strike, you have 28,000 contracts that are open. So, I mean, for me, people, options traders that are newer, they'll look at earnings and options and they'll say, well, there's no way you can know which way it's going to go. And yeah, of course you can never know exactly which way it's going to go, but you can definitely look at, these options contracts and say, I like Nvidia, it's a good stock. I think there's a decent chance it'll go up to 800. And I also think that if it gets creamed, it could go to 600. So why not? Let's just trade these both ways. Place an upside target here, downside target here, and who cares which direction it goes? Obviously, it matters for your stock, but for your overnight earnings trades, you can trade it both ways.
Well, Nvidia today, to talk about sort of la land, they lost $78 billion of market cap. Now, I mean, for 5,000 other stocks, that would mean they were bankrupt. They're out of business. For Nvidia, it was down 5%. Right. So, I mean, we're in the law of incomprehensible numbers is what I'd sort of call it, which is it is too hard to comprehend. But quickly tell us what a butterfly trade is for a civilian.
So, most people are familiar with the idea of coming and just buying a call or buying a put, right?
Yeah.
And that's the most simplistic way of getting into the market. Well, the problem with that is that when you're just buying a call or just buying a put, it's going to be really expensive. And you're also going to have to deal with a volatility crush that will occur over an earnings report. So in options trading, the volatility is going to go up going into the earnings report and it's going to go down afterwards. So what I like to do is instead of, paying a lot of money for just a put or just a call, I like to bring my cost basis down by placing a spread trade instead. The butterfly is going to create a spread where, for example, if you are doing a put butterfly, you're going to buy a put and then you're going to sell some puts at a lower strike.
At a lower price.
Going to be at my price target. I'm usually going to sell those at the price target. So if the price target is 600, I would sell them at 600. And then I would buy some lower put for protection. So what that does is it creates, a multi-leg option strategy that is much, much cheaper than just buying a put by itself. And it creates a bullseye. It creates a range where you're long here, you're short here, and you're long here. And this is the moment and this is the area of opportunity where you can profit. And so you bring your cost basis down. You're also able to take advantage of volatility crush because you have options that you've sold there as well that can ideally benefit from the volatility crush. But the main thing is, you're just creating a range, you're getting a cheaper cost. And you have a way that you can trade a range bound move over an earnings report.
Yeah, but I mean, it's not that complicated, really, but it really sounds complicated if you have never done it before, for sure. But I go back to, Nvidia, $8 billion of sales in the Q4 of 2 years before, then to $22 billion of sales in 9 months, right? Essentially 12 months later. Now we're at the price and valuation where if they have to beat the number to make a difference. I mean, they really need to crush the number at this valuation. And the odds of that, we all know it's going to be double or triple what it was the year before, because this didn't really get going until Microsoft, put $10 billion in OpenAI in March. But again, I just say, if you own Nvidia and you go into this print tomorrow and you haven't at least taken your original capital out, then you're gambling. Why be, you want to play with the house money. You don't want to play with your money. And I would, if you're like us, we've taken money out. We've gotten 100% back. We got 200% back. And we sold some today simply because it's just risk management. And just sit there and have 200% go up into thin air in about 5 microseconds, which was somebody who was long, PANW today, Palo Alto Network. They just lost their options underneath. They just lost 14% or 18% of the value. Yeah. You didn't need to do that, Todd. That's all I'm trying to say.
No, it's great. It's great stuff, actually. But we do need to end it on this block, though, guys, because there's so much excitement surrounding NVIDIA. We could probably talk the entire show about it, but there'll be more to come, obviously, when the company does report earnings after the bell tomorrow. So you definitely want to check in with your favorite financial station, which is obviously Buy, Hold, Sell and Biz Talk Today TV. That's going to obviously have
I thought we were going to start an NVIDIA channel. What the hell? I thought
we probably should. It's a great idea. We'll bring it up at the next board meeting. So
JDS Uniface.
Well, with us today, we have Danielle Shay. She is the VP of Options at Simpler Trading and our resident options expert. So we're so happy that she's with us today. But we have so much more to talk about, so please stay with us. We'll be right back after the break.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Welcome back to Buy, Hold, Sell. Well, so much excitement has taken place on a trading, actually the shorter week because of the President's Day holiday. But everybody, all the traders, all the investors are really awaiting the big number coming out from NVIDIA tomorrow, which we obviously got into and talked about in the last block. But one thing I do want to talk about is another headline story is about Capital One's buyout of Discover for over $35 billion. Truly an all-stock deal, but truly remarkable in that space. Danielle, the financial services sector, this obviously is going to have a lot of people talking that we may be looking at more M&A activity this year in that sector. What is your analysis saying? Do you see any type of a volume increase as far as on the option side?
So when you look at XLF, I mean, I'll just say that I like this sector. It's a nice, smooth, easier sector to trade. When I first got into trading, it was something that I traded quite a bit for that reason. And when you look at XLF, since last October, it's basically been straight up. You also have a really nice consolidation right around that $40 price point. And so I'm looking at the options chain here, and I'm thinking for XLF, I mean, we can trade this continuously higher up into about $45 a share ideally. And so if we can get some more mergers, we can get some more focus on this area. I think this is definitely a spot that we can continue looking at to the long side.
That's right.
Yeah, I mean,
right.
Todd, the other, issue on financials is sort of blatantly obvious here, that you have to make a decision as to when you think the Fed is going to start cutting rates. Now, there were some people out there, I don't know what they're smoking. I would like to get whatever they're smoking, that they're saying we're going to have 7 rate cuts. Are you kidding me? We'd have 7 rate cuts if the economy, tanked. And we're not getting any. And if there's no tankage, right? It should be a Seinfeld show. There's no tankage, right? So the financials that I've always traded have been actually the brokerage firms, particularly in a bull market. So we were also, because of BTC, because of Bitcoin, and because of what's going on in the halving, et cetera, we made a ridiculous amount of money this week buying options on the CONL, which is a 2x of Coinbase, because Robinhood had come out and blown the numbers out of the water, and Coinbase is 5 times or 10 times bigger than Robinhood. I like options on leverage things in the position I want to be at, because now I'm getting a double pop. I think we made I'm just looking at the number here, we get 787% return on a $5,000 investment in CONL call options, and we sold the put options so that we got most of our money back. Financials in a bull market rock, particularly stock trading. Financials, when we start actually getting cuts, they rock, right? So and not necessarily the same way, because there's their interest spreads come down. But when we hit that bottom last year, Danielle, you must have been all excited with financials, and then of course the regional banks all came down because of the blow up on office buildings, et cetera, and yada yada yada. But I'm totally with you that this isn't maybe the most exciting part, but it's really nice to get option premium and make money on the upside.
Yeah, I like it. I mean, I think it's a strong sector, and I think it makes sense to continue looking for a higher trade, especially as it just continues to recover.
That's right.
Yeah, it double bottomed in October, the beginning of November. And that's when, people started pricing in 7 rate cuts, blah, blah, blah. But I'm totally with you, man. That chart is long and strong.
That's right. So, okay, so let's pivot off of this. Danielle, last time we had you on the show, you were really looking at the S&P 500. I know this is an area that you trade. If you could tell, what do you think right now? I mean, there's so many eyeballs. A lot of the analysts that we have on are giving us their forecast for the year. But you're trading options. You're looking at it in a different approach. Explain to the audience what you're thinking of for the SPX right now.
So when you're looking at the SPX, I mean, there's a lot of opportunity there, especially when you're, day trading or swing trading, just to trade within a range. I mean, overall, I think that the SPX had a fantastic start to the year, right? And we traded right up to about 50.48. So again, I like to look at those key psychological values. About 50.50 was my price target just for, the shorter term. I do think that we're going to end up at 5,100 here pretty soon, but I want to caution viewers right now because the last 2 weeks of February are typically a seasonally bearish time. And so, we have that pullback that we've seen that kind of started today. We have Nvidia earnings coming up. And so one thing that I will do during this time frame is I'll use and I'll hedge a little bit in the SPX. So, now that we've fallen below 5,000, we're at 49.75. Traders can hedge to the downside, even into 4,900, I think would be a pretty decent bet, just looking for a pullback this week and next week. But ultimately, once you get into March, especially as you get closer to earnings season, we typically start to see the stock market rallying again. And I mean, overall, I'm bullish on the SPX. It's an election year. I just think that this is a ticker that for options traders, they have a lot of volume, a lot of liquidity. And when the market's pulling back, it's something that, you know, you can easily jump on to trade to the downside as a hedge. And then when you start going back up, I mean, you can ride the wave again.
Hey, so Danielle, we have essentially the Magnificent 8, and then we have the non-Magnificent 492 in S&P 500, where the earnings growth on the top 8 is about 24% year over year. The earnings growth on the bottom 492 is negative 4%. So why not just bet on where the freaking earnings are and take, you know, some type of the top 8 and forget about those jokers that aren't doing anything?
I mean, to be honest, that's really what I do these days now.
Yeah.
I mean, there was a long time where I would trade all kinds of different names, and I'd be looking for different patterns and setups on, you know, whatever ticker it showed up on. But for the past couple of years, it just hasn't really made any sense to trade anything other than the big names, especially when you're an options trader. You have that weekly liquidity that you can use to sell spreads or buy spreads. And, you know, because of all of this action with the market makers and these magnetic values that you have, I mean, it doesn't really matter if it's going up or down. You know, if you have a good feel of price action and technical analysis, and you can use your options chain to identify different targets. I really just focus on these Magnificent 7, Magnificent 8 stocks. Yeah. And for the most part, I don't really trade that much else.
Yeah, I've never seen, you know, everybody's wigged out about concentration, that 8 stocks are basically responsible for all the S&P 500 gains this year, but last year it was, you know, the terrific 10. But it is what it is. You know, I mean, to be obstinate, oh gosh, there's true value in energy names when oil's going down from $105 down to 72. Come on, man. Right. You know, value investing, quote unquote, has not worked for, you know, most of my life. It was great in the 70s, early 80s. You had crazy stuff. You could buy stuff for 2 PEs, right? But the world has become a lot more sophisticated. And why should I, you know, look, if I'm Warren Buffett, I can buy something and then it will be marked up because it's in the Buffett, house of Hall of Fame. So the multiple that Buffett gets with Berkshire Hathaway is about 2x what those companies that they own would get. So that's an outlier. And I've owned them for 30, 40 years. But they are the exception, not the rule. The earnings growth is in the tech space, basically. And you know, and at least for this last 5 years, it's been almost a no-brainer.
Yeah, no, that's good. That's really good. Well, I got to tell you guys, so much great information. Danielle, I have to say, last time we had you on, we had dozens of people from the audience wanting to know how to reach you. Can you tell everyone how they can actually get in contact with you?
Todd, did you tell her that she's married? No, I mean, what is it? They wanted.
Oh, they wanted her. They wanted her trading advice, Toby.
Oh, okay. I'm sorry.
But she's the absolute professional, and she's a subject matter expert, obviously. And I think they wanted to bounce some ideas. But what are your social handles for social media?
Okay, so on X, you can follow me at Trader Danielle, Danielle is how you spell my name. And then I also have a YouTube account as well. So it's just at Trader Danielle. And you definitely have to be careful because there's a lot of people pretending to be me. But
is that right?
Yes.
Oh, jeez.
Yes, that is absolutely true. But I do follow you, and I do receive several notifications of other accounts. So it's actually kind of, you and Jeffrey Hirsch are famous for that. But
Hirsch is getting ripped off on his name too.
He is quite a bit, actually. It's quite interesting. Geez. Yeah. So, but Trader Danielle, and we will also have that information in our description as well, and for the show. So Danielle, thank you so much for joining us today on Buy Hold. So we can't wait for the Nvidia numbers to come out, because I know we're going to have a lot of follow-up discussions with you later on.
Danielle, just make it the real Danielle Trader.
Yeah,
that's right. That's what I should call myself.
Just be the real Danielle Shay.
Danielle. That's good. That's very good. Awesome. Right. Well, listen, we want to thank everyone for joining us today. Just one other note for everyone. We just, on February 18th, we hit our 2-year anniversary for Buy, Hold, Sell. And it's amazing how the show has evolved and the distribution channels that have opened up in those 2 years. We want to thank all of you for making it happen, including all of our great guests like Danielle Shay, as well as all the other. We have dozens of others that come on the show frequently. We really want to thank everybody. So Toby and I can't express our gratitude enough. So, but again, we have so many great things that are coming out as well. You definitely will want to stay tuned. So with that said, on behalf of Tobin Smith and Danielle Shay, I am
the real Danielle Shay, damn it.
Yes, the trader Danielle. We want to thank everybody for joining us today, and we hope to catch you next time on Buy, Hold, Sell. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
If you like Buy, Hold, Sell Live, be sure to smash the like button.